they're pretty wide. Should I just take 20,000 out of the 457 or the 401 and put it into the Roth IRA I have, or just spend it, or what? I don't know.
Are you saying because you've got all this required money that you have to take out of your retirement plans because of required minimum distributions, you keep getting pushed into over the IRMA thresholds?
Well, he's not 73 yet,
No.
so he's trying
No,
to...
I'm not even there. That would just be killing the two birds with one
Okay.
stone.
All right. So that's not even an issue yet.
Yeah, so I have a couple questions for you. All right, so you are retired, correct?
Yes.
Okay, so the retirement accounts that you've mentioned, are they still under the 457 401k umbrella, or have you done rollovers into IRAs?
No, they're both under their individual. Still a 457
Okay.
with Nationwide, and still a 401 with Fidelity.
So the reason I ask that is if you rolled them over to an IRA, when it is time that you have to take money out, you can determine what your tax rate is going to be. Pulling the money out of those qualified plans as they are currently is going to be a minimum 20% withholding. So I don't know if you want that or not. That's an issue for you to deal with sometime in the future. Have you factored in what the new bill that was just passed is going to give you as far as offsets or non-taxability for your Social Security?
Well, it's going to reduce it's a senior discount. It's a senior deduction. It's really not a direct off your Social Security.
Yeah. Have you added that into your calculations yet, or no? Because that's $6,000 if you're married.
Or 12,000.
Or 12,000, excuse me, $6,000 per person. We may have to continue this after the commercial.
Hang on, Mike.
Can you hang on, Mike?
Okay, yeah.
All right, thank you.
It's a good question. We got to get you back on the other side of the break. If you want to join Mike in this question, maybe he's hitting a nerve close to you too, and you got some more questions that popped up through Mike's question. Pick up the phone right now, dial 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
Packs of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite. Marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black.
One of these nights, one of these crazy old nights.
Welcome back to On the Money here on WDBO AM 580, always streaming live in your very own WDBO app. If you want to join the conversation, we do have Joe Bert. We do have Nancy Hecht, two certified financial planners with the Certified Financial Group, taking your calls one phone call away. 844-580-9326 is the number to call. 844-580-WDBO. Or send in your open mic using the free WDBO app. Before the break, Joe and Nancy were taking Mike's call.
Well, let's reset the stage here. Mike, you want to restate what your issue is on IRMA for those listeners who may have just joined us?
Okay. My IRMA is sort of locked in. I mean, I can't reduce my income. So with my guaranteed income, it takes me just over the lowest threshold for IRMA.
Okay.
So I have to pay that Medicare penalty.
Are you married, Mike?
No, well, no, twice divorced.
Okay, so you're saying, all right, so, okay, so you're easily pushed over because it's 103,000 is the threshold.
Right, and like I was like just 107, 109, but you know, projected for the next year, you know. Okay. So
got it.
I feel like I'm just going to stay above it with my own COLAs, you know.
Got it.
Mm-hmm.
So I'm debating, like I said, to kill two birds with one stone. Should I just start drawing from the 457 and the 401 or whatever, and just go up to the high end of that first bracket, like to 133 or whatever, and just bank that money, spend that money, put it in a Roth conversion or whatever, and then that would also reduce it so I'm not, because if those accounts keep growing, then I might get a big slap in the face, you know, when I'm, 73, 74, whatever.
Right.
But I don't like that either because you're going to push yourself in the 24% tax bracket.
Well, but he's making a choice whether to pay the piper now or later. And also, you don't know in a couple years what the tax laws are going to be. So you're just dealing with the knowledge that you have right now. You had mentioned something about your bank accounts pushing you over. There's a potential to maybe, and I'm not asking you to tell us on the air, how much you have in cash reserves, but maybe making some of those cash reserves tax-free. So they're still relatively liquid, but maybe, they're not going to be adding to the difference. Have you met with somebody like us, Mike?
No.
To do a full
no.
analysis for you? Okay. Well, now
No.
maybe the time for you to pick up the phone and make a call. Most of us tend to be tax adverse. I am. I don't think it's a privilege to pay more than you have to. But taking.
But I feel I pay a lot of taxes.
Yeah.
Sure, of
Yes.
course,
No,
of
that's
course.
totally understandable. Maybe some charitable gifting could help. Who knows?
Yeah.
And I understand you wanting to do potentially some conversions now, so you'll pay less in the years going forward. Which situation is going to be better in the long run is hard to say without doing some actual planning.
Mike, the beauty of what we can do for you with the software that we have, there are so many moving parts in your situation, as with everybody's, is so let's look exactly what you're dealing with. And then let's talk about what happens if you make that Roth conversion now, how much you can convert, what that translates to in coming years, given current tax laws. Those are all the things that need to be factored into. It's very difficult for you to do it unless you have access to the software to do it. And that's what we do as certified financial planners. I wish we could give you a definitive answer as to what to do. But Nancy and I think have given you some things to consider, but there is I don't want you to take any of this advice and take you to the bank on Monday because,
No,
I understand your dilemma.
Yeah.
So give us a call.
I think doing a retirement cash flow plan for you would be helpful and can answer some questions for you. And the one thing I tell my clients, the biggest unknown we have to deal with is the tax law. So, and you're dealing with it right now.
So, but all we can do is deal with what we know. So when we deal with what we know, and then the beauty of it too is when things change, all of our clients' plans are automatically updated with the new tax law. So, Mike, if you haven't sat down with a certified financial planner, we encourage you to do that. We have 17 of them here. There are many qualified here in Central Florida. Give us a call. We have an office in Winter Garden, maybe a little bit closer to you if you're interested. So just let us know, and we'd be glad to help you. But we sorry can't give you more specific information this morning, and we really appreciate your listening.
Thank you so much,
Thank
Mike.
you.
Oh, thank you so much, Nancy and Joe.
Sure.
That's one of the reasons it's always good to talk to one of you guys one-on-one, because Mike's one question turned into a back and forth for about 15 minutes. So
Yeah.
Everybody's situation can be so unique that it's good to have an expert on your side. What do you say we head over to Orlando and we take John? John, go ahead. You're live on the air with the Certified Financial Group.
John, what's up?
Hi, John.
Hey, Nancy. Hey, Joe. Question for you. I have, when I took SSA, I, just basically put 10% aside for taxes automatically.
Mm-hmm.
And at what point in OB3 does it go into effect? And is it automatically 10% going to go away that I'm withholding? Or do I need to go down to the SSA office and...
So you're thinking that some part of your Social Security is going to be tax-free. Is that what you're operating under?
Well...
That's what it sounds like.
I was told.
Well, we got to read the fine print. It's not, your Social Security is not going to be tax-free. However, as a senior, you get an extra $6,000 tax deduction and $12,000 if you're married filing a joint return. So that'll help offset some of the taxation of your income.
And what I would say, John, is if you've just set it at the 10%, go through a tax cycle with this new bill and these new laws and see how it fleshes out, and then you can make some adjustments.
Okay, but that's adjustable. I mean, I know I can't take back,
Right.
My original election at 62, but I can adjust whatever is taken out.
Sure.
Yes.
Going forward. But once again, unfortunately, I think that misconception, you're not the only one that has that misconception about Social Security being tax-free, because that was touted during the campaign and trying to get the big, beautiful bill passed. But the best that Congress could do is give you $6,000 if you're single, $12,000 if you're married, an extra senior deduction, and that's subject to income limitations and expires in a few years as well. It expires in 2028. It's called the senior deduction.
Okay, well, thank you very much.
Well, you're welcome, Joe.
I
We
didn't know
appreciate
if
your
it could
call.
be I didn't know if it was automatic or if I had to go adjust it.
No. Well, what you have to adjust, any withholding on your Social Security, but you don't get any automatic break from Social Security. You've got to file that to get that deduction, and you don't have to itemize either.
Okay, well,
All right.
thank you very much.
All right, you're welcome.
Hey.
Thank you for the call.
Have a nice weekend.
Thank you so much. And again, if you want to call in, the lines are now open for you. 844-580-9326. Your question will be first in line. 844-580-WDBO. Send in your open mic using the free WDBO app. And we also have Rodney Ownby taking calls off the air. If your question is of a more sensitive nature, you can go ahead and call in at Rodney. Just tell him you're listening to On the Money, on the air of WDBO. And Rodney can be reached at 407-869-9800. That's 407-869-9800.
And I see we have a text question there, Josh.
You got it. The text question comes to us from Cheryl, and Cheryl says, I am changing jobs. Can I move my old 401k to a Roth?
The easy answer is no, she cannot, unless part of the 401k was Roth 401k. A lot of people have made a designation to put a portion of their 401k into Roth and then they forget about it. But assuming that it's all traditional, what she needs to do is open up a rollover IRA, and then she can move the assets from the 401k from her old employer into the rollover IRA, and then she can do a conversion from the IRA to a Roth. So there's a few steps to it. It's really not that hard or that complicated, but it can be done. But it cannot go directly from the 401k to a Roth account.
So you want to check with your HR people as to how they handle it. There may be a circumstance that you can do that, but once again, you want to be sure that you've got that done right, because if you don't, you're going to end up with a surprise and come next tax time. But appreciate the text.
So, and we were talking a lot about Social Security and a lot of the changes with Mike. And I want to let everybody know that Charles Curry is going to be holding a Social Security planning basics, rules, and claiming strategies, which are really important now, on Wednesday, September 3rd from 6:30 to 8 p.m. here in our Learning Center. If you go to our website, financialgroup.com, and look at the workshop tab and pull it down, you can make a reservation. All of the workshops that people have been hosting have been filling up really fast. So if you have some questions or concerns about the new changes with Social Security, I highly recommend that you reserve your spot.
Once again, that's financialgroup.com, financialgroup.com. As Nancy said, we hold these in our Learning Center, totally, absolutely free. And people walk away with some good information that I'm sure will save you some money. I see another text question there, Josh. Take it away.
Of course, Steve says, we just had our first baby. Congrats, Steve. And right back to work, Steve asks, what changes do I need to make to my accounts?
Well, as I was talking about with my sister, and this is the opposite end of the spectrum, you have to look at beneficiary designations. And with the kid, what's important from an estate planning or, dealing with any type of emergency situation is, God forbid something happens to you and your wife, who do you want to take care of your kid? And the person taking care of your kid physically may not necessarily be the same person that you want taking care of your kid financially. And those are two different considerations. I mean, when my daughter was young, we had one person named for the physical and one person named for the financial, simply because of the personalities of the two different people that had agreed to take that responsibility. And then, a new kid, new Social Security number, whole new opportunities for identity theft and stuff like that. So if you participate in something like LifeLock or something along those lines, you want to make sure that your child's identity is protected also.
The thing that I think many people fail to appreciate is that when that baby leaves the hospital, that baby now has a social security number.
Mm-hmm.
And unfortunately, that social security number is out there.
Right.
And there have been stories, I have not experienced it personally, but I have heard stories of that social security number being stolen.
Well, yeah.
And then 20 years later, when that baby wants to apply for credit, finds out that their credit is all messed up because somebody has been using their name and social security number for 20 years.
Mm-hmm.
And so you want to protect that, as Nancy said, LifeLock or some methodology to be sure. And that goes for your social security number as well, because that, that is the key to getting access to your credit, which when you discover it too late can really be a nightmare. So keep that in mind if you're a new parent, that you want to protect that social security number for your child as best you can, and LifeLock is a way to do it. It costs a few bucks, but let's call it insurance for the rest of their life.
Yeah.
What do you think?
No,
Good
I
idea?
mean, we use it.
Yeah. Mhm.
It's been a really good source. I was a victim of identity theft, so I know what a pain it is to try and. It's amazing how when you're trying to put everything back in place, how me trying to find out who stole my identity.
Right.
I was then thought of or treated as the criminal.
Yeah.
Because it was an invasion
Yes.
of that other person's privacy,
yes.
which blew my mind.
Did you see
away.
that email I sent around to everybody the other day from Wells Fargo, the bogus Wells Fargo? This was an email floated into my inbox. It has the Wells Fargo logo, the stagecoach, the colors, the whole 9 yards. And it's just to notify me that someone had been now added to my automatic bill pay and the name, some bogus name that I didn't recognize. And it said, and it had the, for contact, nope, not just an FYI, but it also included a phone number to call and to click here for more information.
Oy.
Well, honest to God, I mean, it is frightening what's going on out there. Obviously, I knew it was bogus, but how many people get that legitimate looking stuff, and all you have to do is click on that, get more information. This doesn't look right. I want more information. And all of a sudden, you're in the loop, and man, you are in trouble. So be on the lookout for this stuff. If something pops into your inbox that does not look right, that you weren't suspecting, pick up the phone. Don't call the number that's on their website or that you get in that email. Pick up the phone and call their main number and inquire. Just a heads up out there, because it's a jungle out there, folks. I hear the bumper music. Josh, take it away.
A great rule of thumb, Joe, what you just said there is if you see a number in an email, do not call that number. Google their number, look up their number, grab a letter or something that has the real number on it, and start there.
Yep.
So great advice, Joe Bert. More than just the phishing, the scamming world, Joe's an expert on. He's an expert on the financial advising as well. If you had a question for Joe Bert or Nancy Hecht with the Certified Financial Group, pick up the phone right now. Dial 844-580-9326. Rodney Ownby taking calls off the air at 407-869-9800. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
Tomorrow, today. Our fiduciary approach to providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. Sitting here in studio with Nancy Hecht and Joe Bert, two certified financial planners with the Certified Financial Group. If you want to call in right now as the show comes to a close, I invite you to write down this number where Rodney Ownby is taking calls off the air, because it might be 10:01 and you still want to use the advice of the Certified Financial Group. And Rodney is here taking calls at 407-869-9800. 407-869-9800. Joe, Nancy, what do you say we take one more text question?
Let's do it. Let's do
All right.
it.
Nick wants to know, how will I approach managing and minimizing financial risk during retirement?
Well, one of the things that we have all of our clients do is take a risk tolerance quiz. And it's not a big, extensive thing. I think it's 10 questions, and some of them are pictures, so it's really easy to take. And it allows us to put together the appropriate mix for the client between equities, which are stock-based mutual funds, exchange-traded funds, or if somebody has individual stock holdings, and income, which would be cash, money market, or any bond-based mutual funds. So once we have an idea of what that balance is between the equities and the incomes, that's a good first step at managing the risk. Now, if he's concerned about managing it when he initially retires and then throughout retirement. So just because we do this risk tolerance test in the beginning of our relationship doesn't mean that that's how things have to stay throughout. Twice a year, we look at the balance between the equity and the incomes for our clients' portfolios based on what's happened in the markets. And have the equities grown too large? Has the income size grown too large? Do things need to be put back in alignment? And sometimes people will change their risk tolerances based on what has happened to the balances on their portfolios, or because of aging or life cycle differences or things along those lines. So as part of a regular review and update, this is something that we look at and something that should be questioned and addressed frequently throughout the whole retirement process.
So it's a way to get started, but once again, as Casey said, it's not cast in stone because life changes, markets change, and the world changes. So it's our job and responsibility to be sure that the portfolios that we manage for you continue to meet your needs, not only now, but going forward. And we want to talk about Score My Funds, Nancy.
Right. So Score My Funds is something that we do, again, regularly with our reviews and updates. And for any new clients coming in, it's a process that through a program called FI360 that's through Fidelity Investments, I think.
Center for Fiduciary Excellence.
Okay, excuse me.
That's okay.
It's 11 different data points that every single fund that we use, whether it's an exchange traded fund or a regular open-end mutual fund, is held up to. And it's very sophisticated. And the results are, is your fund green? Is it yellow? Or is it red? And, it really helps us determine. But if you would like your funds scored with no obligation for doing business with us, you can go to scoremyfunds.com and you could put in the ticker symbols of up to 20 mutual funds, and we'll send you a report.
Once again, it's for funds and ETFs, not for individual stocks. So that's scoremyfunds.com. We also have a workshop coming up that we can't get into details, but that's coming up in September about Social Security.
Please go to the website.
Go to our website. That's financialgroup.com. And Rodney Owenby is taking calls off the air at 407-869-9800. And Rodney, coincidentally, also mans our Office of Convenience out there in Winter Garden. So for our listeners out there from the villages in Claremont and Leesburg and so forth, you can meet us in Winter Garden. And that about wraps up the show. Josh?
Thank you so much, Joe Bert, Nancy Hecht. You just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.